What's up, everybody? It's your boy Kevin Alpha here again for yet another video. And today we're going to be diving straight into the Euro USD. I'm going to be taking you through what multi-time frame analysis is. I've always wanted to put out a video about multi-time frame analysis, but kind of been late on doing that. And I'm going to take you through the basics. This is the daily time frame, and for multi-time frame analysis, we want to understand that every time frame on its own is individual and unique, but it works for the greater good of the overall time frame, which is the daily time frame. Now, on the daily time frame, which you should have no doubt by now because I've taught you all the map structures in previous videos, this was a chalk. Daily time frame had a chalk, and this was where the inducement was taken. Daily time frame had a chalk right there, and we had proceeded to expect a new outcome. That's we're no longer buying, we now want to sell, right? So we spotted our order blocks after our inducement was grabbed around here, an unmitigated order flow, we spotted it. We attempted to go in from there, but the market did not close, did not give us any kind of, buying opportunities when it did this, selling opportunities rather when it did this. Came here, and we have to look at that in the lower time frame. And the lower time frame, we want to see, like I always say, we really want to take our time to see a point of entry. Now, if you're not so certain, I probably have said this before in my previous video, is there are two methods of entry I use the most. One of which is the single candle order block, and the other is the waiting for a structure to pick so you can go through, right? Like a new structure forming on the lower time frame, and then you dive in. That's what we want to do. We want to see how those two entry methods would work on the different time frames today. Now, as you can see, this is the order block for the bearish order block for the daily time frame. And about weeks ago, months ago even, I had put forth, I had a screenshot of this. It's on my Facebook. You should see that. And I think I'll put it up on this video as well, where I expected a mitigation of this particular order block when the market got to this point. It had not mitigated the order flow, the fair value gap, sorry, of this particular structure. So when the market reversed from here, I was kind of disappointed as well because I expected that mitigation to happen so I could take the trades to the downside. But as the market would have it, it did all of this, and this were like new structures on the lower time frame themselves, right? So here we are right now. Eventually, the market finally came back up and mitigated this order block on the daily time frame. Now, we're not really going to see much price action here, but if you were to trade with the daily, which I highly do not advise, we would see a lot of waiting around because these are like huge candles. We would have the huge daily candles because there's like all 24 hours to form. And let's go down to a lower time frame. The next time frame I love looking at, the 4 hours time frame. Now you would see that we want to see the market going in the same direction on all time frame before we are more than confident with anything we do. Doesn't mean we cannot still be confident with trades if we are not in perfect alignment on all time frames. It just means I have this thing where I can leave trades overnight if they're all in alignment and just fall asleep and not bother too much about them. You all must remember this trade because I posted a video about it and how, I expected it to go down, but then it went up. And as we have it, the order block was mitigated on the 4 hours time frame. The daily time frame order block was mitigated on the 4 hours time frame. As you can see right here. Now, what we want to do is understand that for the 4 hours time frame, things are a little bit different. Let me take that out of the way so you can see better. Now, when the mitigation happens, if you're waiting for a single candle order block, this is what you'll find. Your single candle order block formed at this point where you got in. Now, if anything, I would always advise that you target something very specific. Take all of this away and treat each time frame like an individual time frame on its own. regardless to what happened in previous time frame, in other time frames and all. Let me give you this, right? If we were mapping structures for the 4 hours time frame, and this is where we're taking our trades, this is what we would have. We would have that when it mitigated the order block and changed direction, the last pullback in this case will not be the inducement. At least we're not expecting it to continue in that particular direction. The last pullback will be our chalk. That's what we'll have. Last pullback will be our chalk. And when the chalk happens, a change of character means we can let go of the previous bias we had and begin to look to take trades in a different direction. Now, that different direction now be bearish, right? Because we were all bulls for a while, and now it's bearish. Then for the 4 hours time frame, if we were taking trades on the 4 hours time frame, we would map that this is our last pullback, therefore the inducement. And when the inducement is taken, we begin to look for an order block or an order flow in which we can sell from, right? Let's take this out of the way for a second so you can see clearly like this was an independent candle and the rest of this greens formed inside of it, therefore making it not a pullback, therefore making those candles irrelevant. So our pullback, if we're mapping it out, would be something somewhat like this. Pullback number 1. Number 2. Number 3. Number 4. And then the inducement was taken. As you can see, that's how the pullback worked for the 4 hours time frame. And when we understand all of that, we tend to know the bigger picture of how the trades are going to flow. Now, if we're mapping for the 4 hours time frame, you've seen the inducement. The moment the inducement gets confirmed, the low gets confirmed, and then we find the relevant POI. The relevant POI would be this order flow right here. And as you can see, the market mitigated it. But never forget, the moment the inducement is taken, the low gets confirmed. So this is by far, sorry I didn't map this out earlier in the beginning. This is by far the structure for the new structure on the 4 hours time frame. The new structure after the mitigation, the change of character, the high, the new low. The best thing that can happen is us discovering our POI in time. Now we have our POI right there, right? We have the order flow. In it, we have the fair value gap, which is in between this particular green candle and this red candle, because this other red candle is irrelevant. This other red candle is irrelevant because it reached neither the high nor the low of this particular candle. For knowledge on that, probably check out my previous videos where I show you why a candle is irrelevant. I'm gonna put the link to that somewhere around there. Now, that's the fair value gap. Then this green candle, this independent green candle, is the order block in this situation. So we map out the order block, and now we can see that the mitigation happened for the order flow and it went down. Now the reason I do not use the 4 hours time frame to trade is because these are huge moves and our stop loss is going to be huge, right? But that's the overall structure for the 4 hours time frame. Now it hasn't breached this low yet with a candle close below, so it is not a breaker structure yet. We wait for that to happen, then it's a breaker structure. But then if we wanted to see this picture a lot clearer, if we understood that, oh, there is a 4 hours POI at this point, we would be at the 15 minutes time frame to get a clearer picture and see what it is we should have done and where we could have done it better. So we have that. This is what the image would look like in the lower time frame. And this is the 15 minutes. As you can see in the 15 minutes time frame, the candles are still humongous, still very, very big, still humongous, right? Now we have that if we were mapping structure for the 15 minutes time frame on its own, individually, we would have followed the flow, came down here, would have followed the flow, came down here, push, push, inducement grab to the 15 minutes time frame, break a structure to the downside. So this would be our new chuck. And falling down, we took the inducement at this point, and then with the candle sweep above, so it went all the way down. This would be our new breaker structure, and this would be our new chuck. So the moment this wick would have been our POI for the 15 minutes time frame, it came to that wick, gave us that, and I took this trade. I took this trade. I have a reel about it, a YouTube short actually about it. I took this trade and we pushed towards this side and came back up and got stopped out. So we're overall not too bothered about that. This would have been a change of character for the 15 minutes time frame, but it is an inducement point for the higher time frame. See what I'm always saying? And the moment inducement is taken, the first thing it does is seeks the POI out. It seeks out the POI, right? So now, change of character happened on a 15 minutes time frame. We need to map our new structures. Let me use the path tool. It's gonna make it so much easier for you, ladies and gentlemen. We know that the push was from there, here. The candle went above. There's one. Pull back. Oh, this did not go below it, did not go above it. So yeah, still would have been right on that one. Push above. Then we have the inducement grabbing right there. And then we have a close above eventually. Do we have a close above? A candle body closing above that high? Yes, but it was not sustained. And this is where your discretion come in, where you got to go to the higher time frame and be like, what am I going to do about this point? This is why trading cannot be automated into bots and then you have consistent results and all that. Trading as an industry would be done if bots could trade it, just perfectly without us bothering about it. Of course, there are algorithms that can get better results, but trust me, it's not so to the common people. So when you see all those buy this bot made me this online, do not, please. It's a scam. If the bot made them so much money, they would keep it to themselves and not sell it to anybody. But that's just the sad reality of the trading world. So this is a breakout structure on the 15 minutes time frame, the new change of character, because of course it closed above that. But then we have to find a new inducement point, and it took that inducement with a very long wick, and then push up to give us that break. So we know that our new inducement would be at this point, but so close to the change of character, and we did change characters. Why? Because we tapped into a higher time frame POI, the Forex time frame POI. We have no real way of making it out of this. I must promise you that, because this candle, following by the rule, this candle, it's high and low protected. So 1, 2, 3 to the fourth one before it breached it. 1 to 3 are irrelevant. So you cannot count them as candles in which to take trades from. You could, however, use this wig, right? This long wig, because this is inside of it, although it's mitigated, but since an irrelevant candle, it's a minor mitigation, right? So we have this, and you could take that wig, but that's a huge risk because of the size. See that? 21 pips. I cannot risk that. Cannot risk 21 pips. Now we have the market mitigated that and pushed solidly towards the downside, which would have made you very right if you had taken the trade. Very, very little drawdown of any sort. Like it just mitigated and it was a quick fall. Very little drawdown of any sort. But if I would advise, I would say take it from a point where you could have a 10 pip stop loss, like my own stop loss rule, right? From a point where I could have a 10 pip stop loss and I would not have been tapped in. And that would have been okay. Sometimes you miss the trade, sometimes you get it. That's just how it works, right? So we have that massive falling down all the way. Since character was changed at this point, with a candle close below, we began to map structure for the downside. And as you can see, no inducement was taken here. So that's just one pullback, another pullback when it goes to this point. Not valid because 1, 2, 3 in the body of this other candle. So pullback continues all the way to the downside, and pullback number 2 right there. Then we have that's a pullback, inducement taken. So therefore this is a low, swept the low, then closed below it. Why am I just making it a little bit complicated for you? But you would have to really follow me to understand this. So please subscribe, and you're going to find that you can ask me just about any question and I'll provide the answer. If you want me to go in depth into this video or make like a simple video about this particular reading and mapping of structure, because it might be complicated for you, it's just your first time. But having been in this game for a while, I understand how this mapping of structure work, and I can just do it with my eyes without the path tool, without always trying to be very specific. The errors are just very minimal, if any. So we have pushing up, finally a close below. So this would have been one structure, then a change of character on the 15-minute time frame would exist at this point. And now that the inducement has been taken on the 15-minute time frame, we would expect that it pushed to this particular high and then give us a low. We got to that particular high, did not tap it in, but we're pleased to at least know that our fair value gap was filled, right? Because the three POIs, the most important is the order flow, then we have the order block and the fair value gap. The fair value gap is also really important, right? So the fair value gap was tapped, so we can expect that a trade will happen from that particular point. But then it's a candle that went in, no candle close below has happened, so we're still looking at the possibility of probably coming back up to mitigate this. Let me map that out for you. We're still looking at the possibility that it would come back to mitigate that particular order block, or the liquidity it got from the mitigation of this order flow would be enough to drive it to the bottom. The bottom being here, the new low on the 15 minutes time frame. Inducement existing at this point. Once inducement is taken, we know the rule. Once inducement is taken, we now know that we have our new low down here, and because it's also the low of the 4 hours time frame, so no point keeping it here, we can always keep it at the low, below the low, right, of the 4 hours. But then something I also like doing, which is very nice, can also help you extend your profit target, would be using Fibonacci to extend. So this is the change of character. Sorry, I haven't drawn that yet. And we span from there, from the 1 to the 0, and we know that's where it is. So our entry point would be like this. Our target would be the 0.27 of the Fibonacci ratio, and wow, that's a little long, and we would have it at just exactly 10 pips. But then we see that the profit target is really small, and if it changes character, it's pointless being in this particular trade. So at this point, we'll keep it at 5.5 pips because that's above our chalk already. So we would have a 1:5 0.45 trade, and we would probably see how it plays out if it comes back to give us the single candle order block entry from here. Because I place it right here doesn't mean I'm just going to place a limit order right there, tap, flow. No, right? I don't do that. In order to increase my win ratio, I need to be more smart with my entry methods. And I told you my two most important entry method, which is a single candle order block. That's a candle taps this. I wait for a candle to close below the candle that went the highest, and I single out that candle that went the highest as my point of entry from beginning to the bottom. And this is a 30 pip. It would be great for the morning, something easy, something quick. That's how we have it. So, ladies and gentlemen, thanks so much for watching. Please like, subscribe, and ask me all the questions you want. I'm open to answering these things. People don't really want to see someone who's transparent with this forex uh, thing and all that. You want to see them gurus with them flashy cars and everything, lying to you and telling you, "Oh, this gives you a 90% win rate." Nothing is that high. Nothing is 100% guaranteed with trading. You simply just try to make as much as you can, maintain your money through proper risk management, and go with it all the way, right? So please stay away from those scammers. Stay away from people who try to get money from you for selling courses and try to, make you go through their stuff. They always target the beginners, right? And that's why I made it kind of my job to target the beginners and teach them what it is they need to know the S.M.C way so they don't fall prey to all those scammers, right? So like, subscribe, ask me all the questions you want. I'm going to put out as much video as possible. You can also follow me on Facebook in case you don't get a quick response here, which I will respond as quickly as I can. You can also send me a message on Facebook. I would love, love, love to see your journey, how you started, hear your story, and probably even talk about it here. Okay? Thank you so, so much for watching.